If you're just joining us, I'd like to say welcome to WAPI PropTech Summit. You know, WAPI Summit is in its 8th year, and this is the first time we're having a PropTech Summit. It does say that we are being deliberate about ensuring that we infuse technology in our business, and I think it's a very welcome introduction to WAPI Summit. So let's applaud our panelists again as they exit the stage. Thank you. Technology has continued to enable businesses in different sectors, in different industries, and it has made businesses more efficient. And the real estate sector should not at any point be left out of this. Peter Drucker said, and I quote, "You innovate or you die." And that means we must continually devise means to stay ahead of the curve and the pace. You know, I love their conversation. So if you're just coming in, this is our first panel conversation for today, and it has focused on opportunities, obstacles, and solutions in the PropTech market, especially in West Africa. Now, whilst we're trying to disrupt the old trends, we must also work towards earning the trust of people. But before you earn the trust of people, you must have built trust, first of all, before you can buy the trust. That was one of the critical things I learned from that panel conversation. Then again, I picked out, as real estate practitioners, we must be cautiously optimistic about the opportunities that are inherent. We must be resilient because there are definitely challenges, but what that invariably means is that there are opportunities as well, because with every challenge that you encounter, it means that there are opportunities for us. Then finally, we must be deliberate about promoting the milestone achievements in PropTech so that we can actually earn the trust of people that we're trying to sell to. So when there are any milestone achievements, make sure you make noise about it. Let the media know so that we can earn people's trust and just gradually permeate the hearts of people and the society. Thank you very much for that wonderful conversation. We'll move on very quickly and we'll have a fireside chat. This fireside chat will focus on market transformation and development through technology. So today was strictly on PropTech. So we're speaking to real estate and technology. I'll invite the moderator and the guest very quickly. Now, I'll invite Tayo again, Tayo Odunsi, co-founder and chief strategy officer at Construct. If you know Tayo very well, you will know he's very passionate about the real estate sector and just ensuring that the sector grows, especially through technology. So it's an honor to have you again on stage, Tayo. Coming up stage to join Tayo for this fireside chat, please let's make welcome a serial entrepreneur, a tech operator, the founder of Ventures Platform, Mr. Kola Aino. A warm round of applause for him, please. Thank you. Let's also remember to use the hashtag when we're posting on social media. We want to keep the conversations going. WAPI 2022, WAPI PropTech Summit 2022. Thank you. Over to you now.
All right, thank you so much, Mujibade. And thank you so much, Kola, for agreeing to do this. I know your schedule is super packed, and yeah, we're just happy to have you here talk to us, today. For those of you that don't know, Kola is founding partner of Ventures Platform. Ventures Platform is a venture capital fund with investments in companies like Paystack, and you've exited Paystack, congratulations. Mono, Brass, all of those in fintech, but you also have companies like Thrive at Greek, and the likes. What are your views, generally, topic is market transformation, on leveraging technology, to transform a market, an industry. We will come back to real estate, but, you've essentially done this, in finance, using fintech, right, and in agric. Let's hear from you.
Good afternoon, everyone. I guess it's still morning. Good morning, everyone. Delighted to be here, and thanks, Tayo, for hosting this conversation. I made my first PropTech investment in 2014, and then I stopped. Haven't made another since then. And then until recently. I mean, I don't know if this is. I guess this is public. Until recently, when I made an investment in Livent. So it's a long window from 2014 to the Livent investment. And so it's a really fascinating conversation because, you know, when I was listening to the panel with Tola and the other panelists, I was actually, you know, taking notes because as a fund, we feel that the underlying conditions for prop tech to scale, or for prop tech companies to scale, seem to have come together. It's unfortunate that they have come together at a time when the global venture capital market is having an upset tummy. But I think that's now become a bit of a convulsion with the latest developments with FTX. But I think that when I think about the things that made me less bullish about prop tech from my first investment in 2014 and where we are today, I think the vertical has come of age. So congratulations to everyone that has stayed the course, like Tola and the folks at Estate Intel and you guys as well.
Thank you.
The question that you ask is actually at the core of our thesis, our ventures platform. In essence, we're not fintech investors. I know it looks like we're fintech investors, but our vertical is actually quite broader. Fintech represents about 50% of our portfolio. We're invested in, we've done about 85 investments. There's probably about four of them that are fintech. 85 active companies, actually. I always have to check the company because, you know, when you invest in early, you're going to have casualties, right? And across all the verticals that we invest in, we like to say that we're looking to invest in markets creating innovations that solve for non-consumption. And I think that's at the heart of the question that you asked. How do you transform markets? Because without, you know, creating a new market in places like Nigeria, it's really tough to capture value. There's other kinds of innovations, you know, that I think flourish in other markets, like sustaining innovations or enhancement innovations. And again, I don't want to get very theoretical, but in simple terms, you know, it's one thing to improve a product, right? Say a new model of a Mercedes-Benz, for instance, to upsell or to charge a higher price. But in places like Nigeria and West Africa, most of the markets that surround where we are, the real opportunity is actually in the fact that individuals and businesses cannot consume the goods and services that they need because they either can't afford it, or because the markets are poorly structured, or because of some other encumbrance to consumption. And the way you solve for that is actually by creating a new market through a combination of activities that we broadly describe as reshaping some points of the value delivery system on multiple points. So that could be the actual design of the product. That could be distribution, like you guys are trying to do with LiveBend. That could be, it could be marketing, or it could be division. So there's, you know, there's a concept of division where you take one product and you cut it up into chunks. And I like to give an example with a fintech company that, you know, we're early investors in called PiggyVest. How many people here use PiggyVest? How many people? Thanks. Thank you very much. God bless you guys. So what PiggyVest essentially did is take an investment savings product, right? And you know, traditionally, if you wanted to invest in a high-yield investment product that the kind PiggyVest offers, you had a very high minimum investment amount, right? And what they essentially did is they chopped it up into so they could take smaller units, but on the back end, there's a bulking together that happens. And so that kind of sort of product innovation that allows you create a new market and bring in new entrants is really at the heart of market transformation in low-income communities like the one we live in here in Nigeria. And I think that as we start to see more of that with prop tech companies, on top of the fact that a number of the enablers you require for scale are now available, I think we would see more and more success stories.
Fantastic. Can we give Kola a round of applause? That felt like a...
It didn't come naturally, so maybe I wasn't hitting the high notes.
No, yeah.
Thanks.
That's definitely natural. Nice, brilliant. That's awesome. You know, just dissecting innovation, and you know, just as you were just speaking, I was just seeing, you know, and I guess that's where my next question is: that what are your views, you know, as regards prop tech? You know, you've dimensioned, you know, innovation and the various ranges of innovativeness that, you know, a market requires, and I'm glad that someone like you realizes that everything that needs to come together for prop tech seems to be, you know, mature now.
Yeah.
But what are your views as to prop tech right now?
So I think my views as to prop tech are very clear. I think I wrote one of the first angel checks for LiveVend. So you know, I'm very bullish on prop tech now. And as a fund, at Ventures Platform, we're actually in the middle of putting together a thesis on the vertical.
Fantastic.
You know,
Did you hear that?
I'll say publicly here that we're now actively looking at prop tech as a fund. And we have sufficient dry gunpowder, you know, to deploy capital now, you know, across the continent. So I think that says a lot about our views about the sector. What I'm really curious to see, though, is because our thesis is really about solving, again, back to non-consumption, mass markets, right? So how do we, what solutions are targeting? Are going to solve for the housing deficit that we have in Nigeria. It's a significant. Well, it's last time I checked, I think it was 28 million units. Is that about 20 million units? If you put that in dollar terms, it's probably about 40 billion or so. I think from the numbers that we have, US dollars, and so there's a significant housing deficit. There's all sorts of problems centered around people not consuming either the right volumes or quantities or the right levels of quality that exist in the market. There's also data issues, right? People not basing their investment decisions on sufficient data. I think the more and more that we see innovations targeted at the heart of non-consumption, I think that prop tech will continue to be relevant. We already talked about the underlying enablers. I think you now have with the advancement in payments, so you've solved that leg. Access to credit also is now more available. You know, LiveVend's got a collaboration that's enabling balance sheets for your users. KYC is so there's very few sort of reasons why a prop tech innovation that is targeted at the right segment of the market wouldn't scale here. Obviously, we're in a bit of a lull from a fundraising standpoint. And I hope we get to talk about sort of the fundraising standpoint and what prop tech founders can do. But in summary, I am very bullish about prop tech and hope that we can do a few investments in the near future.
Fantastic, fantastic. So just to reiterate, and in case you missed it, Ventures Platform Fund is a 40 million USD fund.
It's actually larger than that, but that's fine.
Okay. And they're revising their investment thesis to invest in prop tech. So, Realty, Live Easy, guys, there's money, right? Let's get to work.
But there's also very high expectations, and I always have to caveat that because, you know, people forget that, you know, I spent the better part of 12 months fundraising, but we also have to return in multiples, right? And so the bar is really, really high. As an angel investor, the bar is actually lower, right? Because I can afford to, I can't afford to lose my own body. but as a VC, you don't have that luxury. You have to return money, or you're not going to be able to raise your next fund. And so it goes back to the question: is like the prop tech you build has to be a painkiller, not a vitamin. You know, nice to have companies are not going to work in this market, right? So the problem you're solving has to be really painful, has to be really felt by the user, which is what makes a product like LiveVent, for instance, really fascinating. Is if any developer that's really worked in this market knows how painful it is to deal with your supply and your inputs.
Yeah.
And so I think I just wanted to balance the excitement with the reality.
Okay, well noted. Kola, there's something I've heard you talk about very frequently, and it's founder quality. And like talking to Idris the other day, and we were talking about the fact that a lot of prop tech founders are ex real estate guys,
Yep.
guilty as charged.
Yep.
And it's a different ball game. It's a different perspective. It's a different university. Can you speak to founder quality?
Yeah. Actually, I think that's actually a really interesting point because unlike fintech and some of the more software-led verticals, where someone just graduates, as long as they can code, they can launch a startup. With verticals like PropTech, what we are seeing is the majority of the founders have industry experience, right? And that is something that if I was asked to define my founder thesis or my founder archetype in the early days, as long as you spoke really well and you could build great products, I would listen. But more and more adventures were skewed now towards founders that have prior industry experience. Founders that have maybe worked in a corporate or structured environment, so they are familiar with accountability, they are familiar with governance. Across our ecosystem, I woke up this morning to an email from one of our LPs asking a host of questions about how are we strengthening governance across our portfolio companies, right? So there's pressure from the top, from LPs to say, look, you need to have more governance and more accountability in your portfolio companies, especially with everything that's been happening recently, again, across the ecosystem. With companies losing all of their runway, and whatnot. And so I think founders that have domain experience definitely have an advantage, even though that needs to also be balanced with not being narrow in perspective. Founders that are accountable definitely have an advantage. Founders that are also open, because especially if you're raising from an early stage investor that likes to be somewhat involved, like we like to be, founders that are open to feedback are also critical. And I think the fourth thing that I would mention is just the uniqueness of your insight. So one question that I always ask founders when we're exploring an investment is, I'm really trying to figure out, what do you know that all the other players in the space don't know? What's the uniqueness of your insight, that really gives you an unfair advantage, and I get all kinds of answers, and it's often obvious that people haven't really thought it through. They just want to do a startup, right? Which is not how I think you do a startup. I think you do a startup because you felt a pain point, you've experienced a problem, and you want to solve it, right? So yeah, I think especially in today's market, founder quality is even more critical.
Super. Guys, please, let's just keep giving Kolados so that he keeps bringing them out. Awesome. Kola, you can write the book on the rise of fintech in Nigeria. So it will be wrong for me to let you go without you telling us a bit about the Paystack story. I know you wrote one of the very first checks, right? And I think you followed on as well, all right? But in general, you're in Mono, Brass, and obviously you've mentioned Piggyvest as well. Can you tell us a bit about that story and maybe distill one or two lessons for us in PropTech?
Great question. So I think our portfolio has a bunch of category leading companies, and I'm really proud of all the portfolio companies we've worked with. And when I think about sort of the common traits I find across these founders, the thing that comes to mind the most for me is there's a correlation between the accountability that founders exhibit and the way their companies actually turn out. And you know, I always embarrass Shola with this example that, you know, Shola never missed an investor update, never. I remember when the exit happened, actually, you know what he did? Some of us had known about the transaction because it was supporting the process. But when the transaction finally got approved, the email he sent was a forward of his first investor update. And it was just so cool because, you know, if you're as obsessive as I am about organizing email, I had a folder for Paystack. I have a folder for every portfolio company. Now I don't anymore because we now have lots of people. We have a number of people on the team. We have systems for that. But so if I opened the Paystack folder, I could see like all of the updates over a period of time. And another thing that I thought was really was critical to about Shola's sort of approach, and because he mentioned Paystack, is this obsession on metrics, right? You know, and we often tell our founders that at every stage in your company's growth, you have to be clear on what your one metric that matters is. OMTM. The one metric that matters. And now that metric might change over time, right? But when you identify that metric and you create an obsession amongst your team about that metric, you know, it can be a really powerful force. And we saw that at Paystack. In fact, they had something called the Watchtower, right? Where it was like a dashboard. They had done it was animated and whatnot, and everyone was obsessed about that. And I think at some point it was new merchants, it was number of merchants, right? And every time a new merchant was signed up, you know, there's something that happened. So I talked about accountability and as evidenced by reporting. I talked about obsession around metrics. But I think the other thing that I also really enjoyed with that relationship, and Shola and I are really cool friends now, and he's now an investor in our fund. Invested much more money than I invested in my first check. Is a clarity of need, like a conciseness that is unparalleled, an ability to realize that everyone is busy. So when I'm going to reach out to Kola, I will be very clear on what I need. Kola, I need this, because this will make this happen. You know, the weirdest thing I often get is, oh, Kola, we need you to introduce us to investors. Okay, there's a gazillion investors in the world. I'm not going to do the hard work to figure out who should, you know, put up a spreadsheet and let me know, you know. But, you know, that was Shola's approach. He was very clear. So it was easy to help. It was easy to catalyze their progress because, you know, he was clear on what he needed to scale the company. You know, so I'll zoom out now and go macro. You know, so why has fintech attracted so much capital, and why have we invested in fintech? Because I think if you really are pragmatic with yourself and think about a digital economy, you've got to think about it in layers, right? The first underlining layer, as Tola mentioned, some people would describe as fundamental rails, right? And so in this market, you need to be able to capture and transfer value, right? You need to be able to grow that value, right? You need to, you know, and so fintech really is at the strata of that ecosystem, whatever, that is underlining. And so it's natural that you needed to build that first, and which is why I said earlier that I think we're now at a point where the enablers for PropTech are now available, right? Because now with LiveVend, you can, are you working with Paystack or on LiveVend?
not just
We
yet.
need to fix that. You can. I'm sure you're working with some fintech, right?
Flutterwave.
Yeah, working with Flutterwave. Oh, yeah, Flutterwave are great friends, so that's fine as well. But a couple of years ago, you wouldn't, because when I met Shola, for instance, so I used to run a technology company providing services to universities and all sorts of other institutions, and you couldn't make an effective payment online at that time, right? It was just impossible. There was one company that provided it, and the way you got onboarded was you fill like a stack of paper forms and you bring it to their office in Lagos, and you have to wait for a few weeks or a couple of months, and sometimes it will work, sometimes it didn't. Fast forward today, Paystack now supports like 400,000 merchants. That's how you create markets, right? And that's also how you create prosperity. So, I think those are a few lessons I'll share.
Fantastic.
You have to go them to clap. Don't worry. Let them.
All right. I have a few more questions, but I won't be selfish. I'll just take one or two questions from the audience very quickly. One or two questions. I thought that we'll have a ton of questions, actually. Yeah, Tola.
Hi, Kola.
Hi, Tola.
Thank you for honoring this event and for everything that you've said. I remember we spoke in 2019 and we're trying to raise like family and friends round. And yes, you mentioned that you had invested in 2014 in PropTech. It's great to see that full circle. That even the fund now wants to see like a PropTech thesis. I know primarily you invest at pre-seed and seed stage, and ventures platform, from my experience or people I've spoken to, have one of the most rigorous and careful due diligence on the continent. You most likely get that kind of due diligence from US VCs. For founders, and I would have expected like pre-seed founders to ask this, but for pre-seed founders that would be approaching you when this, when you finalize this thesis and you guys are ready to cut a check, what at pre-seed stage, what would the viability of that option? So what would that company look like? I know you're very bullish on people, what that founder looks like, but as a whole, what would it look like? If I invest there, it would be people, product, and problem, right? But what is Ventures Platform general thesis like? And I know you apply that general thesis to PropTech.
Yeah. Thanks, Tola. Really great question. Yeah.
Just want to write on that so that you can take two at once. I think the other thing I would like to know for founders that are here in the pre-seed stage is what's an absolute no-no for you?
Sure.
Like what should founders avoid so that by the time they get to you, they're not already too messy for you to come in?
Fantastic. Really great questions. I'll just take them first and maybe if there are others. So first off, I think I should describe how our investment lens has evolved. So we are primarily seed stage investors, and we have two entry points. We like to invest, and we like to cut our first check in a company, ideally at the pre-seed stage. So at the earliest stage, first check, first money, or at the seed stage. And we also now have a capital reserve strategy where on average, we're happy to make three investments in a company. So from pre-seed, we're happy to cut a check, seed, and also Series A, right? But we know off the back that we're not going to do those follow-ons in all the companies we back, right? So because we have a graduation rate, right? Because we know that not all the companies we back at pre-seed will qualify for our seed, right? So we're very clear on that even when we're talking to founders. And that's all driven by return expectations and our modeling and whatnot. So only our best performing companies will get the follow-on all the way to Series A. In terms of what we look at that early stage, so the biggest sort of filter is founder quality, biggest filter by a mile, because at the stage at which we're investing, there's not much to go by, right? There's not, even though now we're also seeing a new segment of company, and I think actually cheat code, this is actually the best way to fundraise. We're seeing the segment of companies that have been bootstrapped for a while, haven't raised any venture. We're doing a deal now, bootstrapped, profitable. Guys, profits, hello, profitable. And are now going to raise venture. Now you can imagine how the negotiating leverage will be different in this scenario, particularly in this market where there's an overemphasis on margins and unit economics. So founder quality definitely number one. We can invest pre-revenue, but where there's revenue, we also want to see what that traction has been like. Is the market, and the way we think about it is the market actually pulling this product, or are you going to have to do a lot of work to educate users? So we like to see growth, month-on-month growth somewhere in the region of 10 to 30% at minimum. We also are very keen on the size of the market. Is it a growing market or is it a declining market? We're not going to back a declining market. We want to see large or growing markets. And then we look at comparables. Are there other comparables in the market that are superior? We always want to back a 10x product or a 10x founder. So yeah, founder, traction, product quality, and market. But again, I want to be clear that we would invest in a pre-revenue company, and we've done a number of those as well. The other thing that we look at, and I was listening to the conversation about expansion. We want to see the ability to be multi-country, but we're not encouraging our companies to expand to Ghana, South Africa, and Brazil in the first year. You've got to, first of all, make significant progress in your primary markets, before you make that move. And I think for B2B, like you said, it's slightly different, right? Where you follow your customers. No for us would be founders that act like jerks. Like we actually have it on our website. We don't back jerks. And the second no for us would be messed up cap tables. So founders, please defend your cap tables. I mean, we recently passed on a company, and we're looking at it now because they've now fixed the cap table. Because we actually don't want to own. We think the founders need to be at minimum, and I hope I don't break some hearts here, but we think the founders need to be at minimum 60% ownership at their seed, post their seed round, right? So it gives you an idea of the cap table quality that we're looking for. So please talk to a lawyer before you give out ownership, especially a startup lawyer, or reach out, and I'm always happy to guide around cap tables. Thanks.
Fantastic. I think that might be all we can take. Kola, thank you so much for sharing these insightful thoughts. And we look forward to having you in subsequent WAPI PropTech Summits and doing you proud. Thank you.
Thank you very much, Mr. Kola Aina, for sharing from your wealth of knowledge and expertise.